Okay, thank you. All right, so look, this afternoon, I think people have heard about microfinance internationally, and it's particularly associated with what's going on in developing countries much more, and we hear much less about microfinance in Australia. And that's one topic that we wanted to cover today. The other is the impact of fintech or financial technology in the microfinance space. And today we're really lucky to have Corrine from Good Shepherd Microfinance and Elliot Anderson from NAB to talk with us about the work that they've been doing in the microfinance space in Australia. So maybe we could start with introductions a bit more, give you a bit more background about how you came to be working in this area, what you do in this area in Good Shepherd and at NAB, and then we can go into some of the details.
Cool. We'll keep the background quite short just because I think the sexy part is actually the fintech piece. Good Shepherd has been in Australia for 150 years. And it comes out of a Catholic agency, and it was 4 sisters who came at the gold rush and looked after the women and children who were abandoned as part of that kind of social process. Wind forward, 35 years ago, whilst Grameen was thinking about microfinance, Good Shepherd was working with people experiencing family violence. One of the key elements of that is money, the power of money. And out of that came out this program called the No Interest Loans, and it is literally that. It's for fridges and washing machines, so it's white goods, consumer, unsecured consumer lending. And it is about helping people on lower incomes, no or lower incomes, access fair and affordable finance with the financial capability so that they in the future can hopefully make better decisions for themselves. We also know that children in the first 10 years of their life learn about money. And it's not about education, it's about that emotional relationship. And we all know that, money brings up different experiences and therefore different behaviours. So we know that we have an intergenerational impact. It's largely operated through not-for-profits, and I suppose that's where Elliot and the team comes along in that we were working in financial services without realising it.
Great, so I think no need to explain who NAB is, and I think I don't know if I should have been let in the door today, given some of the comments, but thank you for having me and entertaining me on the stage.
Finance is the good stuff.
Yeah, so I guess I might just give a quick snapshot as to what my role inside the bank is, and I guess why I'm sitting here next to Good Shepherd Microfinance. I look after the bank's financial inclusion initiatives, and that really stems out of, as a larger organisation, we've got a social licence to operate. So what is it that we're doing for the broader community that is actually about developing and supporting and growing those who we might actually inadvertently through our policies, our risk settings, exclude from our products and services. And I guess that's where the relationship with Good Shepherd Microfinance comes in, and our role as predominantly a provider of capital. So we've got $130 million worth of capital that we provide at no interest for these programs. Currently about 50 mil of that is used in a various number of ways. And it is really about providing access to those who are most vulnerable in our society and those who are predominantly on low incomes.
Okay, great. Thank you, Corinne, Elliot. One of the things so we've been looking at University of Sydney with others on alternative finance lending in Australia, marketplace lending, and in particular the question of who's getting credit and on what basis they're getting credit. I know you've done some research, Elliot, with I think UNSW, Centre for Social Impact, on the question of financial inclusion in Australia. Could you tell us a bit more about what is the picture for financial inclusion in Australia and that research?
Totally, and I think, so we've been in this space for I think 15 years now, and it was in about 2011 we decided to do a piece of research to look at what is financial exclusion in Australia. And you mentioned Grameen Bank over in Bangladesh. Financial exclusion looks very different internationally to what it does here in Australia, but it still exists. In Australia we've got a really high penetration of transaction accounts, so if you're on a low income you still have a transaction account to do your day-to-day banking, and that's predominantly because of the welfare system here in Australia, so you need to have a bank account to be able to actually access those benefits. Where we start to lag a little bit is in access to credit and also access to insurance. And of course those products are really necessary in this day and age in order to be able to protect yourself when a financial shock happens. Now that was the kind of first research that we did, and we discovered that about 17% of the population was having difficulty in accessing predominantly credit and insurance products. And a lot of it was due to income, so not having enough income to be able to service those products and services. What we also started to understand through the work with Good Shepherd Microfinance was that just having access to products and services is important, but there's also a number of other factors that come into play when someone is interacting with financial services that they need to be able to draw upon to be financially healthy. And that is to be able to bounce back from financial shocks when they occur. So it is 4 categories that we've kind of identified, and that includes access to products and services. It includes the economic resources, so your savings that you've got behind yourself. It also includes your financial knowledge and capability. So you've got to know how to use those products and what products you should be using at different points in time. And lastly, it's also your social capital. So if you don't have access to $2,000, who do you know who can support you in times, whether it be family, friends, or even government and other social services support, such as the Good Shepherd programs. And what we found through that research is that about 2.4 million Australian adults have a high level of financial stress. That means in some of those aspects across their life, they are on the verge of, or potentially not as resilient as they could be if they were to face into a financial shock. And a financial shock is anything from your car breaking down to losing a job to illness, to even positive things like having a baby and expanding your family. All of those things have an impact on your ability to kind of interact and to be financially resilient.
And what about in terms of partnerships in research partnerships in this area? Sorry, in terms of the question of financial inclusion. Oh, sorry, maybe I'll step back. In terms of your research on financial inclusion, how are people dealing with their credit shocks or the shocks to the financial stress and that? What sort of options do they have in terms of credit?
Yeah, so what the research looked at, or does look at, and I've got my notes here because we are just in the process of got the draft report over the weekend, and I stupidly read it before jumping on a 6:30 flight this morning, so the numbers are all a little bit jumbled. But what we found was that about 1 in 5 people couldn't raise $2,000 in a week in an emergency, and that's significant. We also know that about 50% of the population have greater than 3 months worth of savings to rely on if something does happen. But that also means that less than 50% have 3 months worth of savings. So if you lose a job, your ability to bounce back and get another income stream, if you can't do that within 3 months, you're going to be in some serious financial difficulty. And we know that about 20% of the population have only 2 pay cycles worth of savings to rely upon. And so that's not just those on low income, and I think that's the important bit that this research underpins, is that it's not just those who are poor or on a low income, it's also those who have access to mortgages and to mainstream products or alternative finance products that are living day to day, but living day to day and potentially on the edge.
And what sort of access to credit do they have? I mean, you've talked about people not having access to credit cards. What options do people have in those situations?
So I suppose they are going to alternative finance. So we see a high usage of payday loans. We also see borrowing friends and family, and we see people going without. Good Shepherd has been in that mix through the no-interest loans for the 35 years. Our model was traditionally face-to-face and through welfare groups. Now, that doesn't appeal to large segments of the population, and we also can't be in every community. We are in 600 locations already, but this was, so 5 years ago, together we started looking at how do you use and harness the developing fintech in the market to start providing choice. I think my personal bugbear is, why are those who are so financially vulnerable paying the most? There just seems to be something that's clearly incorrect within the community that we live in, that is continually the flip side of risk-based pricing. Now, we work with lots of low-income people, and you just see these stories and you go, how come I can get my finance at 3% or 5% and these guys are paying 200%? So we kind of went from that position, and we probably wouldn't have started along the journey of fintech without other friends and knowledge. And there are some in the room, so Anthony and our partners at Elliot as well. We started to look at, how do you build a payday lender that's ethical? How do you strip and make the prices right for the consumer and actually deliver something that serves their immediate credit need, but also provides that customer care. So because we're not for profit and we're structured as a social enterprise, we're there to meet that customer's needs completely. If a sale is not the right thing, we will actually send them on to the no interest loan or to a financial counsellor or to a whole lot of other support services. We've worked with getting people in touch with food vouchers, Telstra vouchers, whatever it needs to get that person into a more financially resilient situation. Now, I think there's some slides at the back. Just to show you, after 5 years of deliberations, lots of head scratching and convincing NAB, we came up with, I think the second slide's probably best, Speckle. It's phone-based, primarily phone-based. 80% of our borrowers, they're really young, they're the millennials. We're trying to make them make the right decision in that first credit decision. It is still a SAC, so it is still a higher cost unsecured loan. It is at half the cost of the regulated amount, and that is what the consumers and the advocates suggested was affordable.
And a SAC is a
small amount credit contract. Sorry,
yep.
It's so the world of jargon has taken over. So to do that, we had to, and it's been a journey, we had to help a very traditional not-for-profit get a credit licence. I think Elliot's still recovering from some of that process. We then had to buy in a whole lot of expertise because we were very much a relational business prior to that, very face-to-face, barely a calculator. And we've built an end-to-end lending platform that's auto-decisioned, and we can turn around a loan in under 2 hours. It's pretty slick, and because we were ambitious, I don't think we would have done it if we'd known a bit better. We have got this state-of-the-art platform where we can actually put volume and we can hit any Australian if they want to, and if this is the right choice.
So in a SAC is there's small amount loan contracts up to $2,000, short term, like
12 months.
12 months, short-term loan contracts. And so the competition in that space is the payday lenders, which are offering
pretty ruthless,
much higher interest rates, annual rates. How long has the platform been operating? Or
we went national. We kind of played around on the edges initially because once you build tech, you've got to get it right. And we went national in February, so we're only seeing the preliminary results from that. The demographic is much younger than we expected, very female. Again, we were surprised at the gender split. Lots of worrying data in terms of it is bill stress, it is cars. It's not big buys and not all of it is frivolous. Gambling is very male as an activity. But we've also played around with digital marketing, and you can actually screen a lot of that out. I think one of the key challenges we've faced is we have to, from an ethical stance and from the right thing to do, stick by the law. And I think we're the only player, or one of the only players in the market, who's actually adhering to the responsible lending.
So this is a new platform on top of an existing product that you've been offering? Or
no, it's completely greenfields, built it from scratch.
Yep.
The other platform the other products are now looking at how do we best leverage this tech.
Okay. And so do you have any idea what sort of loan numbers or volume you're seeing through this? February is what is a month?
We've seen 7,000 apps.
7,000 applications, okay. And how do you balance that sort of ethical, like there's clearly an unmet need for short-term emergency credit. How do you balance that with credit risk management and financing?
I think it goes back to the principles of responsible lending. If the person cannot afford it and there is some regulatory obligation that you need to meet, you cannot lend to them. It's not about purpose for us necessarily because it is a cash loan, but it is about making sure that they are going into that credit contract and that they can actually service that. We can see from people's statements, and because we're account scraping, we can see their full history, and it tells you a lot about people's lives, particularly millennials who leave a long footprint of what they're up to. pretty much no questions in terms of whether they can afford it or not.
Okay, we've got a few. Do you want to say anything else about Speckle first, or we take some questions?
No, I think the only thing I'd add is a big part for why is NAB involved and why is NAB supporting it. I think is really the opportunity that technology provides for making real and meaningful change in this space is significant. And I think this is our first foray in supporting Good Shepherd Microfinance and a not-for-profit to start to play a more significant role beyond the 26,000 no-interest loans that we support already each year. And I think it's a different space for NAB, but I think there's a real important role for organisations to be partnering together to try and make a difference in a way that is not profit driven, but it's actually about supporting customers in the needs that they have on a day-to-day basis.
The other reality is if these young people get the wrong kind of credit, they're never going to make it for a NAB home loan either.
Yeah. So there's a risk of going to the wrong payday lender and getting a bad credit record, which brings us to one of the questions about CCR, or comprehensive credit reporting. What is the credit reporting environment? How does that affect people coming to Speckle or to other sort of financial inclusion programs that you're involved with?
Look, I think some of our programs don't credit check, because particularly the no interest loan program, it is not actually a credit contract. But for Speckle we do. I think we believe that comprehensive credit reporting will be good for a lot of our customers. A lot of our customers do have day-to-day expenses. They may not have taken out credit. So I think a more comprehensive picture of their ability is fundamental. Saying that, we are also aware that some of them probably don't have reliable payment histories and have cash flow problems and will potentially be excluded due to their own behaviours. So it's a seesaw.
Yeah, they could be worse off.
Yeah, I think that's right. It's a double-edged sword in some instances. So you will see more people because of their, and we see it through the no-interest loan scheme. Repayment rates on that program are above 95% in terms of no interest, no fees, no charges. No credit checks are actually done on those loans, but we still manage to actually see people who are living on low incomes making consistent repayments. So there will be a number that will be able to demonstrate that they are more creditworthy.
Yeah. So, and with Speckle in particular, so it's not a no interest loan. So
No.
it's you have to get interest back on these loans. You have to manage credit losses. How are you going to balance that, given you do sort of what's clearly going to be a popular platform and
they were some of the skills we brought in. So we are matching the losses against revenue. We are conservative lenders at this stage, and that's about being responsible. So we're pushing the growth slowly, and so I think over time we'll just kind of balance that piece. We have put in conservative numbers around losses, but our experience in the no interest loans also shows us what you can do on a social level, and that social contract between someone saying you pay it back to us so we can re-lend it out is really important. We get people who go to jail and come back and pay their loan off.
Okay, so we have quite a few other questions. What about just in terms of the partnership opportunities, or what are the existing partnerships in this area of micro-lending and not-for-profit lending?
Look, I think there's lots of different partnerships, and as the fintech sector grows, I think there's further opportunity. Traditionally, Good Shepherd looked at the finance sector, but now that data is such an important part of the equation and can lead to much more inclusion, we're working with a whole raft of other organisations. As I said earlier, Ilian is one of our key partners. They help us deliver part of the platform. It's part of how do you actually grow that and rethink the future. We don't share data. It is our credit licence, it is our customers, it's our privacy. The data isn't for sale, and that's one of the key ethical pieces. The sisters still exist in the Good Shepherd structure, and we still have to keep the sisters happy. So at no point will NAB have that access to that granularity. It is not about on-selling it or anything. We're very conscious it's about serving that community need of people who are short of $2,000.
There's only 2 minutes left, so I'm going to try and take one more on Good Shepherd and no interest loans, and the other on small business space. So in terms of the what level of losses does Good Shepherd experience from its no interest loans?
So it ranges from about 4% to 2%, depending on the community-based programs. And again, most of those losses tend to be due to customers either dying or going to jail.
And what about for business? So there's other microfinance programs. What about for small businesses or startups, or for in this space?
Yeah, totally. And so I guess NAB is playing in the space around micro-enterprise, as is Good Shepherd Microfinance. NAB has had a micro-enterprise loans product or program since about 2007. And that program is about providing access to a small amount of credit, so up to $10,000. At a low interest rate of 9.99%. But what we do is we partner with a range of business training and support providers that actually provide support to the startups or the businesses that want to get their business up and going. So it's often that they've got a great idea, some business financial literacy, training is provided, and then NAB steps in to provide access to that capital. So we partner on that front, but we're also supporting Good Shepherd Microfinance in a pilot in South Australia around access to small no-interest loans for startup businesses as well.
Okay, great. Okay, thank you. We might leave it at that. Yeah. Okay, thanks, Corinne. Thanks, Elliot. Thanks very much, everyone.